Welcome to our channel. Today, we're diving into a topic that can significantly impact your finances: tax deductions. If you've ever felt overwhelmed by tax season or wondered how to keep more of your hard-earned money, you're in the right place. In this video, we'll break down what tax deductions are, how they work, and why they're essential for optimizing your financial situation. We'll start by explaining the basics of tax deductions, including the difference between standard and itemized deductions. Then, we'll explore common deductions that many people overlook, which could save you a substantial amount of money. We'll also share tips on how to keep track of your expenses throughout the year, making tax time a breeze. Understanding tax deductions is crucial for anyone looking to maximize their savings and minimize their tax liability. By knowing what you can deduct, you can make informed decisions about your finances, whether you're a student, a freelancer, or a seasoned professional. So, if you're ready to take control of your financial future and learn how to make tax deductions work for you, stick around. We promise to keep it engaging and informative, ensuring you walk away with valuable insights that can make a real difference in your financial life. Let's get started. Tax deductions are specific expenses that you can subtract from your total income to reduce your taxable income, ultimately lowering the amount of tax you owe. Think of them as a way to reward you for certain spending that the government deems beneficial, like education costs or charitable contributions. By understanding how tax deductions work, you can effectively manage your finances and keep more money in your pocket. There are two main types of tax deductions: standard deductions and itemized deductions. The standard deduction is a fixed amount that reduces your taxable income, while itemized deductions allow you to list specific expenses, such as mortgage interest, medical expenses, and state taxes paid. Depending on your financial situation, one option may be more beneficial than the other. For example, let's say you earned $50,000 in a year. If you qualify for a standard deduction of $12,000, your taxable income drops to $38,000. Alternatively, if you itemize and have $15,000 in deductible expenses, you would also reduce your taxable income to $35,000. This difference can significantly impact your tax liability, potentially saving you hundreds or even thousands of dollars. Understanding tax deductions is essential for both individuals and businesses. By leveraging these deductions, you can optimize your tax strategy and ensure you're not paying more than necessary. So, let's explore how you can make the most of these valuable financial tools. Common tax deductions you might miss. When it comes to tax deductions, many taxpayers leave money on the table simply because they're unaware of what's available. Let's shine a light on some common deductions that you might be missing out on, which could lead to significant savings. First up is medical expenses. If your out-of-pocket medical costs exceed 7.5% of your adjusted gross income, you can deduct the amount above that threshold. This includes expenses like doctor visits, prescriptions, and even certain travel costs related to medical care. Next, consider student loan interest. If you're paying off student loans, you can deduct up to $2,500 of interest paid during the year, provided your modified adjusted gross income is below a certain limit. This deduction can be a game changer for recent graduates trying to manage their finances. Another often overlooked deduction is the home office deduction. If you work from home and use a dedicated space for your job, you may qualify to deduct expenses related to that space, such as utilities and internet costs. To qualify, the area must be used exclusively for business purposes. We encourage you to take a closer look at your expenses from the past year. You might be surprised at the deductions you qualify for that could lower your tax bill. By being proactive and informed, you can maximize your savings and make the most of your tax return. Maximizing your tax deductions is all about being organized and proactive. One of the most effective strategies is to maintain thorough records and documentation throughout the year. Keep receipts, invoices, and bank statements related to deductible expenses in a dedicated folder or digital file. This will not only make tax season less stressful but also provide the necessary proof if you ever face an audit. Consider using apps or software designed for expense tracking to streamline this process. Another key strategy is to consult with a tax professional. Tax laws can be complex and ever-changing, and a knowledgeable advisor can provide personalized advice tailored to your unique financial situation. They can help identify deductions you might not be aware of and ensure you're taking full advantage of available tax breaks. Investing in professional guidance can pay off significantly in the long run. Proactive financial planning is also essential for optimizing your deductions. Regularly review your financial situation and adjust your spending habits to align with potential deductions. For instance, if you know you can deduct certain expenses, plan your purchases accordingly. This could mean timing medical procedures or making charitable donations strategically. By implementing these strategies, you can effectively maximize your tax deductions and keep more money in your pocket. Remember, being informed and organized is key to making the most of your tax situation, so start planning today. Understanding the difference between tax deductions and tax credits is crucial for optimizing your tax savings. While both can reduce your tax liability, they do so in different ways. Tax deductions lower your taxable income, which in turn reduces the amount of tax you owe. For example, if you have a taxable income of $50,000 and you qualify for a $10,000 deduction, your taxable income drops to $40,000. On the other hand, tax credits provide a dollar-for-dollar reduction of your tax bill. This means that if you owe $1,000 in taxes and you qualify for a $500 tax credit, your tax liability is reduced to $500. Because of this, tax credits are often more valuable than deductions, as they directly decrease the amount you owe. Some popular tax credits include the Earned Income Tax Credit, EITC, which benefits low to moderate income workers, and the Child Tax Credit, which provides financial relief to families with dependent children. There are also education-related credits, like the American Opportunity Credit, which can help offset the costs of higher education. When planning your taxes, it's essential to evaluate both deductions and credits. If you have significant expenses that qualify for deductions, they can be beneficial. However, if you qualify for tax credits, focusing on those can yield greater savings. By understanding the distinctions between the two, you can make informed decisions that maximize your tax benefits. Tax deductions play a significant role in shaping your overall financial well-being. By effectively utilizing these deductions, you can create long-term benefits that enhance your financial planning. When you reduce your taxable income through deductions, you lower your tax liability, which can lead to substantial savings each year. These savings can accumulate over time, allowing you to invest in your future, whether that means saving for retirement, purchasing a home, or funding your children's education. One of the most immediate impacts of tax deductions is the improvement in cash flow. By lowering the amount you owe in taxes, you free up more money each month. This extra cash can be redirected toward other financial goals, such as paying off debt, building an emergency fund, or even taking that long-awaited vacation. The ability to allocate funds where they are most needed can significantly enhance your financial stability and peace of mind. We encourage you to view tax deductions not just as a seasonal benefit, but as a powerful tool for financial empowerment. By understanding and leveraging these deductions, you can take control of your finances and make informed decisions that align with your goals. Remember, every dollar saved through deductions is a dollar that can work harder for you in achieving your financial aspirations. Embrace the potential of tax deductions and watch how they can positively influence your financial journey. We have discussed how tax deductions can lower your taxable income, ultimately reducing the amount of tax you owe. We highlighted common deductions that many people overlook, such as medical expenses, student loan interest, and home office deductions. Understanding these deductions is crucial for maximizing your savings and optimizing your financial health. We also emphasized the difference between tax deductions and tax credits, noting that while both can benefit you, tax credits substantially reduce your tax bill. You can significantly enhance your financial situation by strategically utilizing both deductions and credits. If you found this video helpful, we encourage you to subscribe to our channel, like this video, and share it with friends and family who could benefit from these insights. Your support helps us create more valuable content focused on financial empowerment. Additionally, don't forget to explore our related content on the channel or visit our website for further learning. We have a wealth of resources designed to help you navigate the complexities of personal finance, from budgeting tips to investment strategies. Remember, being informed is the first step toward financial success. Thank you for watching, and we look forward to seeing you in our next video.